If you are a high wage earner, meaning your household is earning $150, $300, $500, maybe even $1 million a year, you've probably asked, where do I put it? How do I avoid taxes? How do I actually multiply this? What do I do with it? And that is exactly what we're going to cover. In this video, I'm going to give you the exact wealth playbook that I personally used. This is how I took my effective tax rate from over 35% to below 10% in just a year or two. On top of that, investing in a way that actually multiplies your net worth, getting 15, 20, 25% returns. It's completely doable for the everyday person. You just haven't been taught, and today we're going to teach it. Most of you have been taught what I call the broken blueprint. If you go to your job, work there for 20 or 30 years, invest in a 401k, buy your home, that you're going to be good in retirement. The truth is that just doesn't work. Did you know the 401k was not the primary source for most people until about the 1990s? We used to have pensions and other ways to retire, and we were told that the 401k would replace pensions, and that is not the case. We're just getting the first generation of retiring who are relying on that 401k, and all of them are saying it did not work. The internet transformed finances. It created efficiency inside of finances, but the thing is, we have not been taught how to adapt to those changes. I'm not talking to get rich quick. I'm not talking any crazy home runs. Let's do tried and true principles that the ultra elite have been doing for 50 plus years, but now an everyday person can do and can get access to. I'm going to give you 3 steps. You have to do it in this order. Don't skip around. Step number 1 is going to sound way too simplistic, but the truth is over 50% of people making over $150,000 a year are living paycheck to paycheck. That is, first off, sad. Do not allow lifestyle creep to jump in and get out of debt. Step 1, eliminate all consumer debt. There is such thing as good debt and bad debt. We're not going to make this video about that. If you want that, you can go watch another one. But if you have debt that has an interest rate over an 8%, you need to get rid of it. Your credit cards, your boats, your cars, your personal loans that have 12, 14, 16, 28% interest rates have got to go. I don't care if you tell yourself you pay off your credit card every single month. Look at your statements and see if you actually do. If you are carrying debt, we've got to fix it. That's step number 1. Get out of consumer debt because it's going to free up a whole lot of money that we can go play in the last 2 steps. And that leads us to step number 2. This is where we're going to actually have fun. You need to open up the 5 key accounts that are going to build a financial foundation that we can go have fun in step 3 where real wealth is created. The reason we build the foundation this way is it's going to create liquidity, meaning it's going to give you capital that's invested and still earning a good return, but that you can get access to quickly. What we want to do is stop living paycheck to paycheck, start to invest our money, but not lock it up for 5, 10, 15 years where we can't get access to it. And that's what these 5 accounts are going to do. The first account is a fairly basic one, a high yield savings account. You should have somewhere between 2 and 6 months set aside in a high yield savings account that are 100% there for a rainy day. Our goal is that you never touch this. Hopefully you never do. And that's the purpose of the high yield savings account. It's going to keep up with inflation so that if you don't touch it for 4 or 5 years, it's not eroding, it's keeping up with you, and it's still doing its job. But we don't know what's coming, what economic collapse, what random repair is, what car breakdown, what job loss is going to come. And you need a couple months that at any given moment, you can make clear-headed decisions because you're not worried financially about the next 2, 3, 4 months. Account number 2 are your retirement accounts, your 401k and your IRA. I think the 401k is overused. I prefer everyone have an IRA. IRAs historically have lower fees, you have more control over them, and you can usually just go in broad-based, low-cost ETFs and you end up way better off than your 401k. The only exception to that rule, if your company offers a 401k match 1-to-1 where you can put in $1,000 and they'll match it with $1,000, I'm okay with you going into a 401k. If that is not the case, do an IRA first. The average return inside of a 401k in America, fact check me, Google it, okay? It's 4 to 6%. The average stock market return over the last 100 years, 9.9%. You are getting half the return than just the S&P 500 inside your 401k. Start with an IRA. If you have a match, you can go with a 401k, but account number 2 are your retirement accounts. Get them set up and start to put your money there. I tell people 3 to 5% of your gross income should go into these retirement accounts. Account number 3 is going to be a cryptocurrency account. Hear me out, okay? Don't just turn off this video because you don't agree with me. Hear me out. Cryptocurrency, in my opinion, is what's called asymmetric risk. If it can do what it says it's going to do, and I said if, it will be worth millions and millions of dollars. Go look up Michael Saylor and his thoughts on crypto, okay? Multi-billionaire, hundreds of billions of dollars, extremely educated, and he'll talk about it at length. He has proven how Bitcoin can be $10 to $13 million per coin and how it completely works economically. Then you have all the big guys, the State Streets, the BlackRocks, the Vanguards that are getting into Bitcoin, rolling out ETFs, incorporating the blockchain technology into their company. It is a ticking time bomb that is going to go off. I tell everyone 1 to 2% of your gross income should go into cryptocurrency. The reason I say that, if you put $10,000 in and it turns into millions and millions of dollars, your upside is basically limitless. Your downside is just $10,000. Now, no one wants to lose that, but in the grand scheme of things in your retirement, it's not not going to make or break your retirement. Account number 4 is a brokerage account. After you've done 5 to 7 in your retirement accounts, then you do 1 to 2 in crypto. Everything else is just going to dump into your brokerage account over and over and over. And that's where you're just going to pool cash, get more and more cash every single month. And eventually in step 3, we're going to pull from this and use it to invest in other things. But a brokerage account, just going in broad-based, low-fee ETFs, is the 4th account that you should have. And the 5th account, to round up step number 2, is everyone should have a trust account. This isn't like the others where you're actually investing in it, but every single person should have a trust. The purpose of wealth is to bless the lives of other people. No one knows when our last day is, okay? Knock on wood, hopefully it's not for a really long time for any of us. But when that day does come, we want to transfer the wealth in the most efficient way possible. A will is not good enough. To execute a will, to send it through probate, have attorneys and lawyers and the government and everyone facilitate that will and rule on it, is going to cost you 4 to 8% of your entire estate. If you pass on $1 million, that's $40,000 to $80,000 just gone to the government because you didn't take the 30 minutes to set up a trust. Set up a trust, transfer your estate properly, and protect everything that you're building every single day. There's no better day than today, and you might as well do it. Those 5 accounts are what create step number 2. So now we're out of consumer debt. We have built a financial foundation of liquidity through the stock market, retirement accounts, cryptocurrency, and just general brokerage accounts so that you have a good foundation so you can go start to play inside the big leagues. Step number 3 is where you start to swing for the fences. Diversification is key in step number 3, but you've created a foundation where you can go start having fun in tried and true ways that the ultra elite have been doing for 100+ years, but now the everyday person can get access to. What I'm talking about is venture capital, private equity, and large-scale real estate. Those 3 asset classes, average returns are 15, 20, 25, 35%, where the stock market is single digits. You've been told that that's not for you, and that's not true. I own over 1,000 doors with people from social media. How crazy is that? Okay, I'm business partners with people from social media. We've bought over 1,000 doors of real estate. I own over 120 different companies. Stuff like Oura Ring, Magic Spoon, SpaceX, Pura air fresheners, like household names are stuff that I've invested in, and I bring people along with me inside a growth circle to invest in these hyper-viral startup companies that have extreme growth potential. Now there's risk here. I teach you how to do that, but if you diversify, you can mitigate that risk. What that means, let's say that 30% of all venture capital deals go to 0. If it's 30% and you invest in one deal, I really don't know if it's going to go to 0 or $1 billion. Okay, it could go either direction. But if we can invest in 50, 60, 100 deals together, $1,000 at a time, all of a sudden the law of averages starts to kick in, and we get really comfortable saying you're going to get somewhere between a 20 and 35% return. When you get out of debt, have a financial foundation of step 2, and then can start playing inside of these higher markets, you created a blended portfolio that now, instead of averaging a 4, 5, 6, maybe 8% return that most Americans do, you're averaging a 12, 14, 16, 18% return. And I dare you to go play with a compound interest calculator and see how powerful that is. Look at the scenarios and how much it can do. The difference between an 8% return and an 18% return is astronomical in the grand scheme of things, and you can do it. If you walk away with one thing from this video, walk away with the idea that you can invest in whatever asset class you want. You just have to put a little bit of time and effort and education in to figure out how to do it. But I've done it. It's created generational wealth, and you can do it as well. We talked about venture capital, but here's a chart of a bunch of different asset classes, and we call all of these private markets. You see stocks up at the very top, and that's kind of our baseline, but everything underneath that, real estate, venture capital, private equity, alternative investments are all different types of asset classes that you can invest in to start to pull that average weighted return up in your favor to create generational wealth. What's really fun is inside step 3 is these types of investments are also tax advantageous. And so oftentimes I'll take someone that's earning $200,000, I'll help them build their foundation, I'll then open their eyes to private market investments, and I'll help them use these investments to write stuff off their taxes. I actually had a call with Andrew 2 days ago. Okay, I asked him for his permission to share this story. He's a high W-2 wage earner. He invested in heavy machinery with me, wrote off $300,000 off his taxes with only a $30,000 investment, and saved over $75,000 in taxes. He is an everyday person. Love you, Andrew. You're an everyday person that just believed that he could get access to this kind of stuff and is saving tens of thousands of dollars off his taxes. The IRS created the tax book to incentivize behavior. They allow us to write off charitable donations because they want us to invest in charities. They allow us to write off business expenses because they want people to start businesses. So what you need to do, and what I help people do, is I help you find those behaviors that lead to the biggest tax breaks because we're doing what the government wants us to do. And so it's an absolute win-win where you can get your effective tax rate down below 10%. 1% while simultaneously earning some really good money. I do a lot of training on social media to millions and millions of people. I travel the country giving seminars. My favorite thing is helping high wage earners, both W-2 and business owners, and watch their eyes begin to light up when they realize this really is doable for them. I hold webinars every single week where we go over this for about 90 minutes. We do a deep dive into private markets, tax advantage accounts, the foundation that we just talked about. Okay, we basically take the last 10-minute video, expand it over 90 minutes to open your guys' eyes and show you what's possible. If you want to sign up, there's a link down in the description down below. We only let 200 people in every single time. So if you want to be one of those, click the link down below. I'd love to have you in there, but please just be one of the few that takes this video and acts. If you're in consumer debt, get out of consumer debt. If you're in step 2, open the 5 accounts, start putting money in there and start building that foundation. Once you've done that, move on to step 3, okay? You can do everything that we talked about in this video. You just need to start to act. If this has been helpful, hit that subscribe button. I release videos like this all the time, and I'll see you next time.